I'm Michael Webb from Mortgage Republic, and he's
Andrew Overman at Location, and together we negotiate the labyrinth that is the mortgage maze with our viewers each week, answering your topical mortgage-related questions. And this week we have a remortgage question, Michael, and it is: how early can I apply for a remortgage but avoid paying an ERC, which is early repayment charge? How early can I apply for a remortgage but avoid paying an early repayment charge? Over to the expert.
okay. So, that will really depend on a couple of things. So, you will be tied into a mortgage deal. Let's say it ends at the end of June, 30th June of any particular year. What you will need is a mortgage offer that is valid on the 1st of July or the day after the 1st of July. That's a working day of the week. Okay, so you can complete. So, for example, if the 1st of July is a Saturday, your mortgage offer needs to be valid on the 3rd of July, so you can complete on the Monday. So, some lenders are now offering 6-month mortgage offers. So, and more have moved over to this actually. So, you could apply for your mortgage within the 7th month before. So like the December, for example, and then you get your mortgage offer in the January, and that's valid for 6 months, so you can complete in the July. Okay, that's pretty much the earliest you can do it if you don't want to pay your early repayment charge. Be aware there are still plenty of lenders who still only offer 3-month mortgage offers for remortgage, even if their purchase ones are 6 months. And some lenders actually have what is called like a product expiry. So they're saying that the offer's not for 6 months, it's not for any set time, it's when that product expires. So that's the latest date they're willing to complete on that product. So it will be specific to the product within the lender's range. So you have to watch out for some of those as well, because there's been in the past where that's only given you a 7-week mortgage offer, for example, and sometimes can give you over the 6 months, depending. However, usually when there's a product expiry, it's somewhere between a 2 and a 4 month period. And they're high street lenders I'm talking about that do this. So that's the earliest you could do it.
If I can stop you there, why would you have a product expiry? What's the rationale behind that for the lender?
Well, they've secured a tranche of money at a certain cost, and they need that money lent out by that date against that tranche. Otherwise, they're not willing to lend it at that interest rate anymore. So
the product expiry, would that become more prevalent in a market where we have rising interest rates, so that their exposure to risk at lending at a certain level is greater?
I don't necessarily think it will become more prevalent. I think that's it's more internal lender criteria. So there's specific lenders that operate this way. Santander, for example, they're the one that jumps out and comes to mind. Their products have expiry dates. Also, things to bear in mind are the valuation will have an expiry as well. Lenders sometimes who don't, let's say they only give a 3-month offer, they might say, well, the valuation within our system is valid for 4 months, so we'll extend that 3 months for a month if you request it close to the time, and things like that. Some things to consider, and you should be chatting to your mortgage broker about this as part of the process, is what your current lender will offer you. So the time you can look at these deals varies lender to lender. Okay. Some lenders will offer you a deal and allow you to pay the early repayment charge. Most won't, but there are a couple that do, and stay with them. So you just say, right, I'll pay my £2,000 early repayment charge and I'll pick a new product now. Others will say, well, you can pick a new product at 100 days, 101 days or whatever it is before your product expires, and it will just sit there secured for you and switch over when the deals expire. Some lenders allow you to do that, and if the rate is less than you're paying now, they'll let you choose it 3 months before. If your rate is going to drop, they will switch it from the next month and you don't pay the penalty.
Okay.
So you lose, let's say, the 3 months of your 2.7% remaining, but you're able to switch to 1.7 because your payment's less. They'll let you do it early, and obviously you go ahead with that. So there are ways that you can switch early if you stay with your own lender, depending who that lender is, because that's not everyone. And there are ways you can secure mortgage offers for up to 6 months in advance. So one of the reasons we're so busy at the moment is people are having what I would class as base rate panic, and therefore they are looking at their mortgage deals. Some are coming out of their deals and paying their penalties because they're really worried at where they will refix in 18 months' time. And it's something you should be looking at and discussing. And others are saying, well, look, we're 6 or 7 months out. We need to secure a deal now rather than wait any longer and possibly go through a few more base rate rises.
And I just want to sort of bring this into the reality of my situation. So around September, October last year, obviously, Michael, we refer business to you. I think we openly disclose that here at Location. We refer all of our mortgage leads based on the quality of service that we get and the relationship that we've built with yourself and Lindsay, and the feedback also that comes back in from our clients, which we're very grateful for. And you and I were having a discussion, and I mentioned to you that my nationwide mortgage was coming to an end in March this year. It just has. And I was completely green to the fact that I could be looking for a port with that existing lender at that specific time. And you kindly handled that move over for me. But what was really interesting is that predicting interest rates were going to rise, and the fact that I was on a fairly healthy rate and I wanted to now lock in for 5 years, you actually notified me, and no other financial advisor has done this. You notified me that I could actually pause that product switch until the first day after the expiry of my current deal. So I had a really good 2-year fixed rate deal, which I wanted to take full advantage of right the way through till the end of February, because I knew that rates were going to increase. And then my new rate, which was equally as good and actually fractionally less over the 5-year period, has kicked in this month. So if people are wanting to work out the difference between their existing product, what they can switch to, factor in early repayment charges, how can people reach you? Because you have saved me £35 a month over the next 5 years, which is not an insignificant amount of money with the cost of everything else rising. And you delayed that period for me for that 5 months, which meant I still got the preferential rate and no early repayment charges. So if there's people out there worried about the cost of living rises, energy prices at the moment, and whether a product switch or a completely new remortgage would be right for them, how can they reach you, please, my friend?
So the best ways to get hold of me are probably email michael@mortgagerepublic.co.uk or inquiry via our website, mortgagerepublic.co.uk.
Perfect. As always, I'm Andrew Overman, and
I'm Michael Webb.
And you've been watching Mortgage Matters. Thank you so much for your time. If you like what you're watching,
Andrew.
Please do share and hit the subscribe button. Thank you.